For the time being, let's focus on InterGlobe. The company reported a rather strong performance in Q4, backed by festivals, your weddings and the Maha Kumbh as well. That's what took the profit number beyond the 3,000 crores mark. But to discuss what went on in the past quarter, how they see things moving ahead, we're joined with Mr. Pieter Elbers, the CEO of InterGlobe, who joins us on the show. Hi, Mr. Elbers. Thanks a lot for joining in. Well, it's a sharp jump in revenue is what we're seeing. Could you give us some kind of a breakup? How much of it was led by the Maha Kumbh? What was the increase in flights? And do you expect this now to fizzle out?
No, I think we have to look at what's the underlying assumptions we use for India. And with the growth of the economy and the growth of the GDP, we have set a long-term objective by doubling in size between 2023 and 2030. And that means we expect to have a significant growth year over year. Then in the year itself, we always see stronger quarters and weaker quarters. So if we look back to FY25, we saw, for example, that Q2 wasn't great. There was the elections, there was the heat wave. There were a couple of factors which were kind of dampening the growth. What we see then the quarters after that, and Q3 and especially Q4, were kind of picking up a lot in that traffic. And then, of course, indeed, specific events like the Maha Kumbh create some extra traffic and extra demand. And Indigo has operated quite a few additional flights to Prayagraj and other cities in UP. But that in itself is, in fact, a reflection of the overall demand and positive setting. And yesterday, I think the DGCA released their numbers for April, and even April came in at a solid 9% growth of the market.
Okay, all right. Let's talk about FY26 then. Could we expect double-digit growth coming in FY26?
For FY25, we've given a capacity guidance in the early double-digit growth. That's the capacity guidance we have. Obviously, with an 87% load factor as we had in last year, that capacity guidance should not be too far off from the traffic guidance we're giving to the market. So again, early double-digit is the capacity guidance we've given for FY26 going forward.
Pieter, hi. So Q4 has been good, very good, but the street is concerned about Q1, right? We had Operation Sindoor, a lot of people canceled their flights. What was the financial impact on the flight cancellations, on your network schedules? And how do you generally look at how have the months of April and May been for you?
Well, if we look to Q1 and the 3 months in Q1, let me just look at these in kind of separation. So April, we just mentioned, actually the quarter started very good and pretty much in line what we had seen in the months prior. So April was a good, as I said, 9% for the overall market. Then obviously May, and that includes, by the way, clearly the attack at the end of April, which was already there. Then clearly May had a dampener. The impact in May was for us 8 days, a closure of 11 stations and a total of 170 flights per day. That's a significant number. But then if I look to the overall operation of Indigo, we fly 2,200 flights a day. So if we take out 170 flights, it's still a relatively limited percentage of that. The same goes for the overflying limitations for Pakistan. We had to close or suspend rather 2 stations in Central Asia, Tashkent and Almaty. And we have another 34 flights which have somewhat extended flying times in the network. So the overall impact of that is relatively limited. And clearly what we have done is we reallocated some of our flights to the southern part of India and basically are growing from there. Post the ceasefire, the flights have been reinstated and all the 170 cancellations have been reinstated by the end of last week. And we're sort of back to a regular operation. That clearly has an impact on May, but again, it's more in the single-digit range when it comes to capacity impact. We have seen a drop in bookings, as we just shared also in the call. But that seems to have bottomed out. And actually, we see now the first signs of people picking up bookings again. And the resilience of the market is actually quite strong. And we expect, therefore, June to see again a performance which is more in line with the situation prior to May rather than the situation in May.
All right. What is the current outlook, though, for forward bookings as well as the fare trends for the upcoming quarters?
We have not adjusted our capacity guidance for the year. We've actually just reiterated the early double-digit capacity guidance for the entire year. We have reiterated our capacity guidance for the first quarter. Again, slightly lower because of the cancellations in May, but we have reinstated all these cancellations after these 8 days of cancelling, and basically we see the traffic coming back. So for us, no change in planning and no change in expectation or outlook, other than the month of May, which of course will have some impact on the overall profitability.
Got that. So April will be a bit of a subdued month. Can you take us through how was the air traffic and the yields and the outlook on the same?
If we look at the year which has gone by, the 4 quarters had a very distinct operation in terms of demand and even with that performance, and of course the price of the fuel also had its impact on the overall profitability. The last quarter had a very strong demand also in terms of yield. Quarter 1 and quarter 2 are traditionally weaker quarters when it comes to demand, and clearly quarter 3 is also always very strong with Diwali and the festive season in it. So I don't see any reason why this year would be very different as compared to previous years in terms of demand. What is adding actually to it is that IndiGo is continuing its path on further internationalization. So we have stepped up significantly our number of international destinations. We're now into 41, and actually as recent as today, we announced the open for sale flights into Manchester and Amsterdam, operating out of Mumbai and starting in the first week of July.
Give us some more details on a couple of other aspects. Could you provide us with an update on the codeshare and the partnership with the Turkish Airlines? The lease is up for renewal on the 31st of May. So I ask you this.
I think it's important to recognize that flights between countries are governed and by what is called air service agreements, and that's agreements between the respective governments, and the same is in place obviously between Turkey and India. There's an air service agreement, and IndiGo is operating within the guardrails, if you wish, of that air service agreement. That's one. 2, IndiGo is operating in full compliance with the operation mandates and guidelines and opportunities and restrictions which are there by the government. And thirdly, importantly, we've had thousands of IndiGo customers booked on those flights. The majority, by the way, connecting over Istanbul and connecting to other places. And we just wanted to make sure that we continue the operation, serving our customers, and making sure that they can either go to their destinations or come back from their destination, in the light that we had so many bookings. When it comes to a review of the permit, we await the outcome of the government, and we will operate accordingly.
Okay, but in the event the lease doesn't get renewed, then what is the impact on your earnings?
Let me put it in perspective. IndiGo operates a little short of 2,300 flights a day. That's the IndiGo operation. We fly 2 times per day back and forth, so that's a total of 4 sectors to Istanbul. So 4 out of the 2,300. Then obviously these are larger planes, so you can move it a bit up in terms of percentage, but the overall scope is 4 out of the 2,300 daily flights we're having.
All right, final question before we let you go. Crude oil prices have been trending lower. How would this impact IndiGo's margins, considering fuel accounts for approximately roughly around, I think, 40% of the operating cost?
Well, thank you. Well, cost is, of course, an incredibly important part of the basis and foundation of IndiGo, and maintaining our cost leadership in the Indian market, being such a highly competitive market, is incredibly important for IndiGo. And I guess we have demonstrated over the many years that IndiGo has been able to maintain that cost leadership, and that, by the way, will also help us now in the international arena where competition is different, and clearly we should also have and maintain our cost leadership. The price of fuel obviously is an important part of our cost, but in the long run, the correlation between ticket prices and fuel prices is always there. And it may not be immediately in the quarter, or maybe even not 2 quarters, but over time that correlation is there, because if fuel prices will go up substantially, it will have its reflection on ticket prices for companies just not to go out of business. If you look to the outlook for 26, I mean, I cannot do much more than repeat what some of the sort of international agencies are expecting in terms of a environment which is likely not to change. But I guess we all know that this can change pretty much overnight if something unexpected happens. And if I were to be in a position to make an accurate fuel projection, I guess I'll be doing something else than running an airline. So against that backdrop, we keep the agility. We have the youngest fleet, and with that, a very fuel-efficient fleet. So I think Indigo is very well placed to, in case fuel would rise, to have the adequate planes for that. And if fuel remains at this level, to continue to operate with very attractive prices for our customers.
Pieter, great conversation. Thank you very much for joining in. The Nifty